Want to grow your wealth and build a rock-solid portfolio? In this video, I'll show you how to set clear financial goals, pick the right investments, and avoid the common mistakes that can cost you big. Whether you're just starting or looking to level up your strategy, get ready to take control of your financial future. First, we will start with defining your goals, then creating an account and starting, and then I will give you some tips and tricks. First of all, we need to understand what a portfolio really is. An investment portfolio is a collection of financial assets such as stocks, bonds, real estate, mutual funds, or other investments that an individual or an institution owns. The goal of a portfolio is to grow wealth, generate income, or both while managing risk. A well-balanced investment portfolio is typically diversified, meaning it includes a variety of assets types to reduce exposure to potential losses in any one area. The composition of a portfolio reflects the investor's financial goals, risk tolerance, and investment horizon. So first, define your goals. Ask yourself, what are you investing for? Are you looking to grow your wealth for retirement? Maybe you want to buy a house in a few years to save up for a big purchase. Each of these goals requires a different approach. Next, think about how fast you want to achieve these goals. Is it a long-term plan, like retirement in 30 years, or a short-term goal, like buying a car in 5 years? This will help determine what kind of investments you'll need. Higher risk for long-term growth or more conservative, stable options for shorter-term goals. And finally, how much risk are you comfortable with? Some people can handle the ups and downs of the stock market, while others prefer a more cautious approach. Understanding your risk tolerance is key to shaping your portfolio in a way that works for you. Now that you defined your goals, it's time to create a plan and start building your portfolio. Let's go through the key steps to get you started. First, decide how much you will invest per month. Consistency is key when it comes to investing. Determine a realistic amount you can commit to regularly, whether it's a small portion of your paycheck or a larger sum from savings. This helps you steadily grow your investments over time. Next, think about what you want to invest in. There are many options, including stocks, bonds, mutual ETFs, and real estate. Your choices should align with your goals and risk tolerance. Diversifying your investment can also help manage risk and increase potential returns. For this, you can watch our last video about assets. Finally, consider how long you plan to hold these investments. Are you in it for the long haul, aiming to grow for decades, or do you have shorter-term objectives? Your investment horizon will influence the types of assets you choose, your overall strategy. Now, where do you want to buy? Once you've created a plan, the next step is deciding where to actually buy your investments. You have a couple of options depending on your preference and how hands-on you want to be. One option is to go with big institutions like BlackRock, Fidelity, or Vanguard. These companies offer a wide range of investment products like mutual funds and ETFs, and they also provide professional management. This can be a great choice if you're looking for a more hands-off approach where experts make the decisions for you. Alternatively, if you prefer to create and manage your portfolio yourself, you can go through online brokers or even your bank. Platforms like Charles Schwab, TD Ameritrade, or Robinhood allow you to buy and sell individual stocks, bonds, ETFs, and more. This gives you more control and flexibility, but also means you'll need to do more research and actively manage your investments. Now, let me show you some example portfolios. If you want aggressive growth, you will choose the aggressive portfolio. High risk and focused on long-term growth. You will have 80% stocks, of which 50% in US large caps, 20% in international equities, and 20% in small cap stocks or high growth sectors. And 10% bonds, and also alternative investments, 10% real estate, commodities, or cryptocurrencies. A second option, the moderate portfolio. You have 60% stocks and 30% bonds, with cash or short-term investments with 10%. In the stocks, we have 40% in US large caps, 15% in international equities, and 5% in small cap stocks. For the last, we have the conservative portfolio, low risk, focus on capital preservation. You have 40% in stocks, of which 30% in US large cap and 10% in international equities. Then you have 50% bonds that are safer, and also 10% in cash or short-term investments. Now that you know the basics, let's dive in to the tips and tricks. First, minimize fees and taxes. High fees can eat into your returns over time, so look for low-cost investment options like index funds or ETFs. Also be mindful of taxes. Using tax advantages like IRAs or 401ks can help you keep more of your earnings. Write in the comments if you want a different video on that topic. Next, consider investing in high dividend stocks or funds. Dividends can provide a steady stream of income, and reinvesting those dividends can accelerate the growth of your portfolio over time. Speaking of growth, don't underestimate the power of compounding. The longer you stay invested, the more your returns can compound, meaning you're earning returns on your previous returns. This is why starting early is so important. Time is one of the greatest allies in investing. Also, make sure you have an emergency fund in place before investing too aggressive. A good rule of thumb is to have 3 to 6 months of living expenses saved in cash. This ensures that you're not forced to sell investments during or market teardown if you need quick access to cash. Lastly, stay educated. The financial world is always evolving, so it's important to keep learning. Read books, follow market news, and consider consulting with financial advisors when needed to stay informed and make smarter decisions. But we've talked about all these assets. Now that you know how to manage your portfolio, the next step is figuring out what to invest in. If you're just starting out and not sure where to put your money, check out the next video. What to invest in as a beginner. I'll break down the best options for you to get started. Don't forget to like, subscribe, and hit the notification bell so you don't miss it. See you there.